GM. GM. Daily levels. This is Sunday, 10th of December. And let's take a look at the market. So, today I'm going to talk a little bit about the difference in a pullback, a dip, and a correction, and a top. So, a pullback and a dip are essentially the same thing. You've got a pullback. That indicates that it's in a trend, right? So a pullback in a trend, you would expect price to then go higher. So a pullback is counter trend to the main trend. So that's pullback or dip. Same thing. Buy the dip, right? Buy the pullback. That's what you're looking to do. A correction is more lengthy. So that could be at the end of a significant trend, you have a correction. Right? That could take, in the context of the market, that could take months, weeks. Whereas a pullback, a dip, that'll take days at most. Right? So when you look at the market rising, along the way, you have, on a 1 hour time frame, there's a pullback, very short and sharp. If you go out onto the daily time frame, this is a correction. This was 3 or 4 weeks. A correction, consolidation, same thing. But the correction can also be multiple weeks in the opposite direction. Here, this was also a correction. This was about 2 months, and it was downward sloping, but it was bullish in its nature. And then dips. Dips are for buying. So you see dips more on the strongly trending coins. Which one's been trending up with dips? Maybe Sol, but Sol was kind of up only. Pullbacks and dips. Yeah. So here you're getting brief pullbacks in the uptrend. Pullback, 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 right? This is more of a correction. This went in for about a week or so. Pullback, dip, buy the dip, new highs, and then we moved into a correction. Consolidates, takes more time. The first dip doesn't produce new highs, right? There's a first dip, there's a second dip. It goes sideways, and then we break out. So if the green path, which Solana's following so far, and I talked about this yesterday, the day before, talked about this for a few days now. You want to watch Solana, Injective, Link, and see how do they cope with their breakouts. So far, Solana's been stronger, broken out, still out above its breakout level. I'd expect it to come back for a retest, probably a bounce, and then I would expect it to fall back in. This doesn't strike me as a breakout that is impulsive or going to hold. It has none of those characteristics. Link has already done a false breakout, right? Again, this was entirely expected because many of these hot coins, right, the best runners that everyone wants to get on board, topped out in early November, had significant sideways consolidations, but didn't break out, and their first attempt to break out will fail. Now with Link, same thing. If it drops back down into these areas, I'm looking for another push, at least. I'm not saying tops in by any means. And that's the point of this. There we go. Injective, exact same thing. So I talked about this ahead of time. It's playing out on Injective and Link. It's probably going to play out in Solana eventually, but Solana's a bit stronger. Then you want to look at the rejection candles. So Injective, how was that rejection candle that second day? It was about average volume. Not a very wide-ranging candle. So I would say that's fairly bullish for Injective. So it'll go lower, almost certainly. But it would give you, it would give me at least, more signal, more confidence to buy whatever dip comes, and that it's going to make a new high. Look at Link. Same thing. Rejection candle, above average volume, for sure. Definitely some people trapped there. Does it look like a top? Probably not, but you never know what's going to happen. And Sol, quite high selling volume, just touched over above average. So again, same thing. All of these would lead me towards altcoins going lower. Right, Solana probably goes lower. Probably has room to sell off. Injective, Link, all of that. I think they all can go a lot lower than people want them to. Right, there's no reason to be buying a dip here on Sol. It's just had a reversal candle on the daily, above average volume. People are like, yeah, but it was broken out. It doesn't matter if it's broken out. It broke out here as well. Ended up going down for 8 days before reaching support at the bands. Right, so like I think too many people are going to be wanting to buy these dips. And these are not dips to buy. So back to the point of the start of the video. When we talk about what's a dip, this is not a dip. This is not a pullback that you should be buying. Right? If this is going to be a pullback to buy, it'll probably go down a little bit lower. It'll consolidate, it'll start to come up, and then it'll go. Right? Don't buy these things on the way down, because it might not be a bullish pullback. It might be a correction, which takes more time and has multiple legs generally. And then it consolidates, and then it goes. Right? You have to be aware of that possibility as well. So that's pullback and correction. As we go back over here. Right? It doesn't really matter the time frame. But since we're in a swing trading market, we're talking a few days for a pullback. A day, 2 days, 3 days. And then a correction is anything more significant. A week. Up to a week. More than a week. Right, we've seen this across the market over and over and over. And then you have a decline, like a top. So you have your rally up, probably some kind of blow off top. Right, and then the market actually starts to decline and goes down. And that's when you're looking at a 50% decline from whatever leg we had up. Say this on a daily chart, right? All the way up. You're looking at 50% of that move to retrace, at least. Sometimes goes to 62, sometimes goes to 70, whatever. But you're looking at 50% across the board. Easiest way to look at that one is, for alts, is total 3. Right? And look at it here. Like, we're starting to get that sign of rejection that says just maybe this was taking out the highs. We're reversing back below it. That would certainly be a potential top. So if you look on a weekly chart, from the bottom of this move, we can take it from the very bottom of the last flush up to where we are now. 50% pullback would be into about 380, right? That's the next time that you want to, it'll be weeks away, and that's the next time that you want to be looking at, all right, cool, we've got our way down there, very choppy, very slowly, here we are now, right? Then, as it starts to inflect up, you have that first strong weekly candle around here. That's when you get long again. Long. Long your longs. Fucking long everything in sight. But that'll take a while. And also, it doesn't mean it's here yet. This is not going to just nuke back 50%. There's more demand in the market than there was even back here. Way more demand. And even back in February, it chopped sideways for 6, 7, 8, 9 weeks. Lots of good trading conditions there as well. Many alts were still breaking out in this phase. The alt market as a whole wasn't, but many individual alts were. Usually you go down the risk curve, the shitter stuff is running last because it's getting pumped late. And of course here, this is a strong weekly. Depends how it closes, but if this can close, if we can have a rally into the weekly close, this is a very strong weekly candle. And we can go higher. And if we do go higher, all the better. Because if the pullback comes from, let's say, 500 billion, then you're looking at 400 billion on a pullback to be at 50%. That's perfect. But we do also have this kind of trend line for a retest way down here, which whether we reach it or not, I'm not sure. We did in the last bear market, right? We broke out from that trend line and we nuked all the way back below it. Now that was because of COVID, but without COVID, we probably could have easily came back to the trend line and retested it. So I wouldn't be surprised at all if we fill some of this move back in over the coming weeks, back to 350 or so. And so for Bitcoin, talked about this a while back. So I'll look at the lower time frame. Bitcoin's actually setting up nicely, much nicer than most alts. Right? All we're looking for here is a higher low to form. Doesn't matter how shit or messy or bad it looks. Low, high, higher low, higher high, higher low. I suspect we fill in most of this wick and then hold it. If Bitcoin does that and gets outside this trend line, that's a long signal. Because you've had one downtrend line break, you'd then had a second downtrend line break, and this is heading for 46. Not yet, but that's where my eyes are drawn. Because everyone seems to think there's a big flush, big nuke coming. I said this, I've been telling you, no leverage, no leverage, no leverage, spot only, take profit. Took 75% profit on my bonk. Been screaming this for days. Now is not the time to start thinking about, oh, should I take profit on my bags or whatever. It's too late. You've missed the down move. Bonk's down 25%. Alts are down 5, 6, 8, 10%. It's too late to take profit. Taking profit has to be done before the pullback. Because, back to my point of this video, if it's a pullback, right? No, I deleted them. If it's a pullback, you need to have taken profit by now. Because you're actually getting ready for the next pump. If it's a correction, same thing. Let me actually explain this in more detail, right? This is where we were on Friday night. Everything was going up. Everyone was euphoric. Smart people were taking profit. Taking some risk off the table because things were going up a lot and they wanted to reduce leverage. Right? Then we had this. This is yesterday. This is 10% across alts, 25% on bonk, whatever, right? Now, you're thinking about taking profit here or selling your bags here or getting out or shorting or whatever. Do absolutely none of those things. Because if it's a bullish pullback, it's going to go like that, right? And if it's not, if it's the start of a correction, it's going to go like this. They both start the same. Why do you think people get caught out by a dip and they call it the dip that keeps dipping? Because it's totally fine to long that pullback, assuming it's going to go higher. But if it fails, don't keep longing. Because that's the dip that keeps dipping. The pullback should have one leg, right? One pullback, and away it goes. If it starts to have multiple, that is not a trending move. That is not a bullish shakeout. That's the market telling you something. So right now we're somewhere in here. Can we go lower? Absolutely. But are we going to bounce soon? Yes, 100%. Is that bounce going to go to new highs? Nobody knows. But if you are in a long and you want to get out, better time is there, and of course, you might get the breakout. And here's the other thing. And this is so important. Do not confuse your spot bags, your holdings in the market for a dip. if you start to consider, should I sell my spot after a 10 or 15% dip, you are never going to make money in the market. Ever. Because you don't have any, you need to have more context for what's going on. So zoom out, go back, look at a bull run, and look at what happens, right? I'll actually have to go to a daily chart for this. So all the way from the left to the right hand side of the screen, there are many pullbacks, right? Corrections, April into end of April, correction, rallies up, dip, gets bought, doesn't quite make a new high, correction, sideways for a few months, rallies up, dip, corrective sideways, but doesn't make any new lows. That's a dip to buy. Just a bit more of extended. Up it goes. Pump. Dip. Buy the dip. That was like a 10% down day. Doesn't look like it, but that's like a 10% down day. In the context of a massive uptrend. Dip. Buy the dip. Dip. Buy the dip. Dip. Buy the dip. Correction. 1, 2, 3, 4, right? Legs down. A, B, C, whatever you want to call it with the fucking letters. Breakout. Dip. Right? This is a fast, sort of a high time frame faster dip. Where it's 1, 2, 3, 4, 6, 6 days down and that's it. Away we go. Dip. And then it's over. But this whole thing, and that's me looking on a daily chart. You're not on a daily chart. Because I know I certainly wasn't when I was at my first bull market. That's 380 days. And I remember in my first bull, I was too zoomed in. That was probably one of the biggest things that cost me money, that left profits on the table, was being on a 1 hour chart or a 4 hour chart, which are fine, but they're for executing. Right? If you're trying to trade a daily breakout, well then go to your 4 hour chart and look for a pullback into the bands, get long, right? But it's the daily breakout that you're observing. And so that's on the daily. But if you go to a 4 hour, there are so many dips. So many. So 4 hour chart, go back to 2020 or 2021. Just so many fucking dips. Even stuff like this. This is 12 hours, right? 4 hours, 4 hours, 4 hours. That's a 12-hour pullback. But that's down a few, 2 or 3%. People sold there. People sold that pullback, especially on alts, because it went down 2%. But there's probably alts that went down 5%. How much are alts down today? About 5%, right? And they sold. They're like, oh no, look, we've had a good run, blah, blah, and then away it goes, boom. And how do you think they're going to deal with these corrections? Where Bitcoin comes up and drops 6%. Massive wide wicking candle. Consolidates. And what does it do? Buy the dip, higher. Buy the dip, higher. Then you have a proper sell-off. And this just gets people even worse. But remember on the daily when I showed you and I zoomed out, that's the ultimate buy the dip. Dips are for buying until further notice. Bitcoin doing this now would be like the equivalent. If it did that, it'd be the equivalent of it going down to about 40, 38k. If it did that. If Bitcoin pushed to a new high, which I think it will, and then from there went down 16%, would you buy that dip? Well, that's what it did back before the all-time high in 2020. So, pullbacks, dips, corrections, learn the difference. And the top, where it actually ends, is probably years away. year and a half. The actual top. So even if we go into a multi-month correction, which we can, like we did back in 2020 a couple times, like we did this year, right? Just like we did this year. There's not a time to sell your spot Bitcoin, but you can go sideways for a month or two. You can go sideways for several weeks. But that's most likely reaccumulation. We can easily, we could push to 45, 46, down, cross, low volatile, and away it goes. Right? That can easily happen. No reason to sell there. Zero. You sell when you think it's the top. The top is more about time. We are certainly not going to see the top of the bull market before the halving. That's not going to happen. Not unless somehow unless we blast to 80k before the halving. If we go all-time high before the halving, I would open the possibility of it being a significant top. But we're not even close to that yet. So what does it mean for alts? Well, alts run after Bitcoin. The biggest gains in alts come after Bitcoin is finished. Spot. I'm just going to finish with this. Spot only, no leverage. If you add leverage to trade, do it on dips, in line with your plan, using a stop loss. And when it's not dipping anymore, it makes new highs, scale out of the leverage, take profit, and go back to spot. The only reason anybody... Look at this when I zoom out. People are talking. I see people in the chats and on Twitter talking about this dip. They're like, you should have taken profit. What? What dip? Look at it. Look at the fucking chart. There's people selling their Bitcoin right now. They're selling their Bitcoin because Bonk went down 25%. That's how dumb people are. That's how reactionary they are. They'll see whatever altcoin that they bought at the top go down and oh my god, the whole thing's over. No. Those dips are a buying opportunity. Because guess what? Well, I'll talk about Bonk on Trade of the Day. But I hope you understand. And I'll go more in depth on this on Weekly Outlook. The game at this point is psychological. Do not take your chips off the table. If you want to take some profit, absolutely fine. No problem with that. Do not take all your profit, spot. Do not empty all your spot bags and go full cash. You will fuck it up. It is far too early for that. Take some profit, absolutely. Go ahead. Leverage is not your friend. You can learn how to use it. I have leverage lessons. You can understand how to use it in the context of a system like bootcamp students do. But if you can't make money in an asset class where coins pump 100% in a day without using leverage, you are not a good trader. Fact. People use leverage in Forex because the fucking British pound moves 0.5% a day. 1% is like a big move. You do not need leverage. You do not need leverage. If you are long only, spot only, and you're on Solana, which is not even remotely close to being one of the most volatile coins, and you're trading, I'm not saying buy and hold, because everyone knows buy and hold, you have to use no leverage. Buy and hold Solana, you're up 500% this year. But trading, a lot of people think, I need to use leverage for trading. I get these questions like, what if I'm in the US, I can't use leverage? What if I'm Muslim and it's haram, I can't use leverage? You don't need leverage. This pullback before this final pump from bottom to top was 33%. You're not going to catch that. You're not supposed to catch the bottom to the top, but you wait for the bands to flip green again here and you exit when the bands go red. That's 17%, 1-7. That is beautiful volatility. And that's not hard, right? I'm not saying you'll catch that every time and win every time. That is not difficult to execute, because when you zoom out, it's not as if you had to be super early. That is late stage Solana run. So just imagine you swing trade. Take my swing trading masterclass. anyone who's watched it, you'll know the entry methods and how to get in and where the best entries are. And let's say just basic stuff. Daily breakout, right? Daily breakout with massive volume. Here, this massive volume candle. 3rd of November. Then you go to your 4-hour chart and wait for your consolidation on the 4-hour chart. 4-hour chart on 3rd of November. Consolidates at the 4-hour. Beautiful. You buy spot. Like, okay, I'm getting spot long. Getting in here. Right, after the second touch, I'm in. My stop loss is below those lows with a little bit of wiggle room in case there's a sweep. Below the impulse candle. And then, where are we now? All the way up to the top. You had a 5-hour all the way up to here. Currently, went as high as 6.8. You're sitting at about 5.8 currently. But in percentage terms, it's a 50% price move to there. 5-0. 50% is insanely good returns. Now, of course, the volatility is also there because your stop loss is 20% or whatever, or 15%. But with over time, with improving your trading skills, you can tighten the stops, get better, more favorable trades. But you do not need leverage. So don't use it. And anyone who does know how to use it responsibly for managing risk, then you can ignore what I've said because you've already watched the lessons. You're in Blue Belt. I've shown you how to use leverage responsibly. Leverage is totally fine for capital efficiency. You do not need it. I don't use leverage on 85% of my portfolio. I have spot Bitcoin, spot AKT, spot Gamey, spot Clore, spot whatever else, few other little shit coins. Spot. Because I wake up some mornings and they're up 50%. And I wake up some mornings and they're down 30%. Because that's how a 10 million market cap coin moves. Spot only for all of that. And then I trade my portfolio, long and short, and day trade and scalp and all this shit in between. And that will use leverage, but that won't use leverage because I'm trying to make more money. That's using leverage because I don't want to keep that money on the exchange. And I want to enter with a defined amount of risk without having to put a whole portfolio on the exchange. That's all leverage is for. Leverage is not for betting with money you don't have. If 1% of your trading portfolio is $100, that means you've got 10 grand. You don't have to put 10 grand on Bybit. Put 2 grand on Bybit. And if you have to put a position size on that is greater than 2,000 so that you can risk $100, then you use leverage. But you're risking, if you lose the trade, regardless how much leverage you use, you're risking $100. If the little bar at the bottom, the little box says your loss will be around 100, it doesn't matter if you use 1,000,000,000,000x leverage. As long as the risk is 1% of your actual capital and your liquidation price is not before the stop loss, you don't get liquidated before your actual invalidation, then leverage is fine. For most people, that's 5, 10, 20x. And it is not risky if you have a stop loss because you are not risking money you don't have. Idiots use leverage because they have $500 and they put $300 in the exchange and they go 10x leverage long so they can have 30,000 or 3,000, sorry. And then price goes down 10% and they get liquidated and they lose $300. And that was $300 out of their $500. That's fucking dumb. Same person with $500 risks $5 per trade, 1%. Puts 200 into the 500. Doesn't want to put it all in the exchange. Has to use leverage to get the position size for a smaller time frame trade. Risks $5 per trade. It doesn't matter. You could use 100x leverage. It's the intent, the approach. So don't use leverage. Use spot. 85% of your portfolio should be spot. You should be accumulating cash ready to buy the next correction, deep correction. That 50% pullback I said. That's when you next should buy spot. Buying spot here is not a good idea because we're probably at the top, not the bottom. And then you have to assess whether these dips are dips. Are they dips for buying? Or are they going to be more significant corrections? I tend to think this next one on Solana is more likely to be a correction than a dip. So that's how I'm approaching it. So that's it, GM. See you all on the live stream later. Weekly Outlook Live, 5 p.m. UTC.